What's popping, guys? What's up? It's your boy XO, and in this video, guys, I'll be showing you guys a really simple and very ridiculously insanely profitable forex scalping strategy that you can use to make a lot of cash trading the forex market, guys. This is a forex cheat code that I discovered in the trading market. Basically not me discovering it, but this is something I've actually tweaked and understand in the market. Let's get straight into this video, guys. Alright, guys, so as you can see at this point, the market is actually trending way below the 200 EMA line. And one thing I want to say before I continue this video is you do not want to see the market chopping around the 200 EMA. When you see that happen, just stay out of the market, because it's going to really take you out if you try to take this kind of strategy that I'm about to show you guys in this video. Alright, so as you can see at this point, this huge red candlestick broke out of the 200 EMA line. Well, it necessarily don't need to be this huge. All you want to see is a breakout of the 200 EMA line, and once you see the breakout, then you want to see the market trending below. All right, you want to see the market trending below, not just maybe a little trend below and just smash back up. You want to see the market trending below the 200 exponential moving average line. Alright, and guys, before I forget, I'm doing a one-on-one live coaching section. I'll be explaining the strategy in a more advanced way, guys. There's a lot of ways to trade the market. This is just one of my little ways of trading the market, and if you want to learn even more advanced way of trading the market and making even bigger profits and how to trade your stops like a professional and all this good stuff, then click the first link in the description to join to contact me so I can host a live Zoom call with you one-on-one and teach you how to trade live, guys. This is really live. Like, this is, well, guys, you guys really need to take advantage of this opportunity before before I change my mind, guys. So as you can see, the market was trending below and the market kept on trending, going down and going down. You can see this huge gap, guys. Look at this huge gap the market gave the 200 EMA line. And you know that sometimes, not just sometimes, like most times, when the market is trending away from the 200 EMA line, it's kind of most likely gonna snap back to the 200 EMA line. And at this point, you can see that the market trended was going way below the 200 EMA and it snapped back. So at this point, you can see the snapback. The snapback came back and it touched the 200 EMA line. Alright, guys, so that's the whole premise of this strategy. A breakout of the 200 EMA line, and the market should snap back to the 200 EMA line and touch the 200 EMA line. It must touch. Well, for me, that's just the criteria that must happen: a breakout and a touch on the 200 EMA line. And after the touch, you want to see an engulfing candlestick on the trade. An engulfing candlestick is our entry, and you just take a trade for a sell, for a short trade, and you just take a trade at this point, and you put your stops just slightly above. So like I said, you put your stops just slightly above the engulfing candlestick, just slightly above. And at this point, you can see there's a beautiful trade, and this is on the EU USD and the Euro USD on the 5-minute time frame. And what I recommend is you take a 1 to 1.5. If you're a newbie trader and you don't know how to manage your trade, then I would strongly recommend a 1 to 1.5. But if you're a more professional, if you're a more like advanced, maybe a little bit advanced trader, then I would recommend you take a 1 to 2 on this trade. But if you know how to trail your stops and manage your trade by yourself, then it's up to you how you decide to take this trade. But for me, I took this trade and I ended up getting a 1 to 2 because I got stopped out of the trade while I was trailing my stops. So that is, by the way, let me look for a buying trade. And guys, I forgot to say something, guys. When you're taking these trades, make sure, guys, it is a must, make sure that you're only taking sell trade when the price is below the 200 EMA line. Like, if I should see a buying setup below the 200 EMA line, which is not even possible because we need to see a break and a retest of the 200 EMA line for a sell. So when the price is below the 200 EMA line, you're looking to take sell trades, and when the price is above the 200 EMA line, you're looking to take buying trades. So guys, let me just go and check and see if I can see a buying trading setup, and I'll get back to you guys. And I hope this selling example is clear to you guys, so that we can just go straight to the buying setup, so you guys get to see the buying setup and the selling setup on this strategy. Alright guys, so like I said, I was looking for a buying trade for you guys. As you can see, at this point the market was trending above, but it came back really quick. That's why I said do not take trades like this, just a little move to the upside and snapping back. We want to see a kind of like a big move to the upside, and as you can see, at this point the market broke out at this point and it went up. You can imagine, you guys compare these two movements to the upside, is that this one is way bigger than this other one at this point. So the market went up and it came back to this 200 EMA line, and guys, if you notice, it did not touch the 200 EMA line. That is why I said, well, it all depends on how good you are in trading, but I would recommend it touch if you're a beginner trader. But for a more advanced trader, I would say, well, just calculate your risk and everything. But if I would recommend, it must touch. But as you can see, it's almost touching the 200 EMA line, so I would recommend, guys, you take the trade if it's almost touching. Like if you see the distance of this candlestick wick to this 200 EMA line is almost as good as nothing, so I would recommend that, okay, if you see something like this that is almost touching, slightly touching, then you guys can clearly take the trade. And this is a beautiful engulfing candlestick, as you can see at this point, and let's take the trade for a buy, for a long trade at this point, for a buy. I know, guys, I know that you guys are quite confused because I said it must touch the 200 EMA line, but at this point it's not touching, but I'm taking the trade. That's why I said, if you see something like this that is almost touching, guys, this is almost touching the 200 EMA line, it's just some few tiny movements to touch it, then take the trade. But if something like this at this point, if it's this far, then do not take the trade. But as you can see, it's almost touching the 200 EMA line, so I recommend you take the trade at this point. So like I said, a 1 to 1.5, a 1 to 1.5, or a 1 to 2 for a more advanced trader. But for newbie traders, I recommend you take a 1 to 1.5 on your trade. But if you can trail your stops and cover as much move, then, well, you could have made all these pips, all this move in the market, and even more. So I hope you guys enjoyed this video, and I will see you guys in the next video. It's your boy XO, and I'm signing out. Stay XO.